Kavinder, we've been talking about how you're banking on the domestic travel sector. Give us a sense of the growth potential there.
So if you look at the domestic tourism in India, even prior to pandemic, there was a 7% CAGR at which the numbers were growing. We are about a $200 billion business in India. But the market that we play, of course, is a smaller business. We are a vacation ownership company. And prior to pandemic, even during demonetization, we were growing furiously. We have added cash, we have built our profits, we have added resorts, we have added members. So if I look into the future post-pandemic, the opportunities that I see is the domestic leisure tourism is bound to grow with limited opportunities for international travel and with a lot that India has to offer. And the fact that Club Mahindra, the brand that we operate in, we have right now about 69 destinations where we are present in. And about right now, if I add the international destinations, that would cross 100, the total number of resort destinations that we operate. So I'm looking at fairly optimistic into the future because we have very strong capital expenditure plans to grow our room inventory. And that will take us to 5,000 plus rooms in the next 3 to 4 years.
So the future looks good. How is it looking now as India starts to recover from the pandemic? Where are you in terms of demand, in terms of room occupancy? Where are you in terms of your profitability?
All right. So if I look at the 9 months that passed by, we have done exceedingly well. Our profit growth and the profit after tax levels have been at about 65%. If I look at the quarter that we are in right now, our occupancies are looking healthy at 80% plus. And that's a lot to speak because we have 69 resorts across India. And that means I'm talking about the occupancies across resorts. We are looking at 80% plus. So we have smartly recovered, largely driven by 2 programs that we ran, which is Club Mahindra Safe Stay program. All our resorts are Bureau Veritas certified as COVID safe, following COVID safe protocols. And we launched Travel with Confidence program of its own kind, which gives an end-to-end solution to our members. So the business quarter is looking good, both in terms of member additions and occupancies. And most importantly, we are adding resorts. We have added about 6 resorts till about December. We are adding another 4 this quarter. So we are talking about 10 resorts in the pandemic year, the highest ever.
Tell me, Kavinder, I mean, I think what Haslinda was also getting at there was revenue per available room. RevPAR, how is that, let's say, in 2019 compared to last year? And what is your ideal target looking ahead as you try and grow the revenue you get from available room from a net and an average basis?
So, Rish, the way our business model RevPAR is not a very good indicator of performance. There are 2 performance metrics that we track in our business. One is, of course, occupancy. Second is revenue growth. When we talk of revenue growth, we have 4 sources of revenue that we get. We have vacation ownership income because when members come in, they pay us the fees. And by the way, that fees funds our capital expansion. And that's the reason, if you look at it, we are probably the only hospitality company in the world where we do not have any debt on our books. And most importantly, our occupancies remain high above 80% because of the way our business model works. It's a membership model where we don't charge members the price for the room when they come and stay. It's only for the food and beverage and the activities that they pay for. So if I look at our revenue growth, we have been growing at about 10% over the last 5 years. The resort income has been growing at about 14% CAGR. I don't see any difficulty in maintaining these kind of rates. Our profit before tax have been growing at about 24% CAGR over the last 5 years. We expect a similar levels of growth going into the future, Rish.
Okay, and you see that growth. You look at Asia. Where else do you plan to expand, and will you be using the same business model in order to facilitate that expansion too, Kavinder?
So to begin with, what we have done, Rish, is that we have actually gone out and we have about 10 odd locations where we are present, right from Bhutan to Singapore to Malaysia and Bangkok, Thailand, Phuket, Pattaya, etc. So we have about 10, 11 destinations which are in the Asian region. But if I look at Europe, which is where our focus area is, we have a company called Holiday Club Resorts, which we acquired in 2016. Right now, of course, they are undergoing a second COVID wave. and they are obviously they aren't having a good season because this is a season time for them, the skiing season and the holidaying season. So the holiday club resorts, we have some amazing resorts in Finland. We have 25 resorts in Finland, 2 in Sweden and 6 in Gran Canaria, Spain. So our idea is to use holiday club resorts to grow our global business. Asia, I did mention to you, we have about 10 resorts. We will grow further in Asia.
Right.
The markets are well known. We are not present in Indonesia. We would like to grow there too.
Kavinder, the travel industry can't really take off unless there is a vaccine passport. That's what the authorities are saying. When do you see this being adopted in India?
So it's a very difficult question to answer because the government will have to take a decision on it. But we in hospitality have been making representation to the government that it would be a good idea to talk about a digital green certificate or a vaccine passport, a digital certification so that people can move around. Yes, as of now, that's not a policy, but I am sure that when you are vaccinated, you have the confidence to travel. And you know what? My view is that sometime in April end, the first set of people who got vaccinated would be up and about and traveling again. So I am seeing, because we take bookings 4 months in advance, and I'm seeing fairly large number of bookings coming into our resorts into April, May, and June.